Welcome back, and you're watching Commodity Champions, and we have our guest with us, Kishore Narne of Motilal Oswal and G. Chandrashekhar as well. But Kishore, coming to you first, we've been looking at the volumes on what's happening in the international markets, and there are various global cues to follow as well, and that really makes it difficult to make a longer-term sense on where the commodity prices could really be headed. But when it comes to ETFs, that is an area which is less risky. In the commodity markets, in the Indian space, we haven't really been able to crack that. Why is my first question. And second is, would you want to see more ETF-related products really when it comes to commodities?
I think in Indian ETFs, actually, especially commodity-based ETFs like gold ETFs, have not seen a significant inflows right now. Still, I think when we are speaking to the customers or investors, basically, I think there is an underlying tone that yes, the gold rally is here to stay for, but I think people are still a little skeptical. There is a little sharp rally over a period of last 6 months, so people are waiting for dips to buy. I think gold as an asset class has started to hit the headlines. But I think the investors still a little bit wary. Probably in the next couple of months, as the gold might break that $1,350 range, and in India maybe 34,000 range. So I think that's where a large chunk of investments come in. And secondly, I think we've been asking the regulators as well as to allow derivative-based ETFs in India. I think that's also one thing which might help the ETF market to penetrate much easier in a way, and to a large extent of population in India.
Fair point. Well, yes, the gold prices have been quite volatile, and as I was pointing out, 0.5% up for this week, and we have seen prices hit a 7-month highs as well previously. Of course, we seem to be consolidating when it comes to the gold prices right now. But Kishore, crude prices is a definite outperformer, whether you look at this week, this month, in 2019 until now. We are trading at the higher point of 2019, and there are various factors which really seem to be working in favor, whether it is the voluntary output cuts from OPEC and Russia, or the involuntary cuts that we've seen come in from Iran, Libya, Venezuela, etc. The demand seems to be improving also, with nearly 20% gains in 2019 from where we stand. Do you see the prices moving ahead, going higher going forward?
Yes, we are suggesting a buy. I think there is a sustained momentum, and also there are a couple of especially there is one offshore outage on one of the Saudi rigs, and I think the short term is looking slightly better. Brent touching 65 itself is, again, there could be a stop loss probably above 65. There could be option buying above 65. I think that's the critical level for them. So we are suggesting to buy crude on MCX at 3850 for the short term, with targets close to 3990. 4,000 is a potential short term target for crude.
Kishore, I also want to come back to gold. Of course, you mentioned about the gold ETFs, where the markets or people are looking to buy on the lower side. The gold ETFs haven't seen too much of inflows coming in. And while we are looking at some consolidation, what also is your sense on prices going forward from here? Because there have been, calls about the gold prices moving to 1,400, 1,450. There have been some banks advocating a 1,500 of a forecast as well.
Yeah, it is consolidating. Probably we have seen that 1325, 1326, and probably on the down 1310 kind of range. I'm sure that right now the momentum is again back. With the kind of macro numbers we're seeing, especially yesterday retail sales numbers from US has been a big disappointment. The inflation numbers in China actually are clearly showing a significant slowdown on the Chinese front. So I think we are coming to a conclusion. Probably the rate cycle has halted. If not, it will turn around in US. I think that will be a big boost for gold. And short term, we continue to be bullish. 33,350 could be target for the next week or so. But I think once 33,800 crosses, then there could be a significant pickup in the speed of the rally, and we should be looking at 34,500 in the next couple of months itself.
Okay, 33,800 and then 34,500 in the Indian gold prices is the levels to watch out for. Kishore, thank you so much for joining us and making sense of all of those commodity prices and policies as well. But now joining us is yet another expert, Mr. G. Chandrashekhar. Mr. Chandrashekhar, hi, thank you so much for taking time. I want to actually explore another area with you, and this is an election year. There is a lot of political uncertainty, but once that subsides, do you see attention coming back then to trade? Do you see, especially the agriculture commodities, the farm commodities, continue to make more money? Do you see all of that attention come back there?
No, in my opinion, political uncertainty certainly impacts the sentiment in the market. There is no doubt at all. This is likely to continue till probably early June. And once there is clarity about formation of the government and the stability of the government, and I'm sure confidence will come back into the economy. And until then, don't expect, for example, any large FDIs to flow into India. Or investors, very large corporate investments, for example, or investors to be very active in the stock exchanges. For this is something which happens all the time during times of political uncertainty. The commodity market usually tends to underperform. There is no doubt at all. But having said that, we need to look beyond. That is in the second half of the year and into 2020 and beyond, and that to me looks quite positive in terms of commodity market participation.
Mr. Chandrashekhar, also when you look at the agriculture commodity space, the trade has seen a dip. Do you see a way to improve on that? Because whether you look at the data from January or even before that, what we really seem to be ruling on in sense of volumes is the non-agro space. The agriculture commodities, as Kishore was also pointing out, the retail trade is missing. We perhaps are targeting the same amount of people. We're not going deeper into this trade. We're not getting the major underlying SMEs, exporters, importers, the actual traders, hedgers into the space. What do you think needs to be done from here on?
Very true. I think the sentiment in the agriculture sector is kind of gloomy, quite negative. We have production, but farmers don't get their prices. The kind of support system that the agriculture sector needs is inadequate from a government policy perspective. I have argued for long years that we need a major policy package for agriculture resurgence, and this resurgence can come only through policy support, investment support and research support. This, pardon my saying, has not been forthcoming in recent years, and I'm only hoping that the new government will pay adequate and in fact more than adequate attention to address the structural issues of Indian agriculture, so that a vast majority of the workforce that is engaged in agriculture gets the right kind of incomes, and that will actually help kickstart the economy or even accelerate the growth rates of the economy.
Well, absolutely. The other concern really is about the agriculture commodity prices itself. Even if it's not about the prices or the participation on the exchange, just to count a few then, it has been a deficient monsoon. Some of the states actually announced drought in various districts. And then we saw winter rains and hailstorms in northern part of the India. It has been about lower rabi crop, weak India and global commodity prices. All of that really seems to be impacting the agri space. Where are the major concerns according to you, and what really needs to be worked on?
Oh yes, these are issues I've been talking about for long years. In fact, a couple of months ago there was a major seminar in Nagpur presided over by a very powerful union minister, and I spoke on the future of Indian agriculture and talked about the need for farm resurgence and for investing in Indian agriculture with multiple technologies. Land constraints, water shortage, climate change are going to be real, genuine and daunting challenges for Indian agriculture going forward. And therefore, given these challenges, and these challenges are real, we need to on a war footing start to work towards agriculture resurgence again, let me repeat, pardon at the risk of repetition, I must mention a conducive policy environment, research support and investment support, and political will to implement policies and programs. That is the way forward. Having said that, we must also remember that issues relating to agriculture have been with us for long years. There has been some kind of a benign neglect by successive governments as far as structural problems of agriculture are concerned. And I'm only hoping now there ought to be some kind of a national consensus to ensure that we pay adequate attention to agriculture and agri-related issues. And we saw, we witnessed how agriculture-related issues, how farm distress, how a crisis in the farm sector actually influenced election results recently. Therefore, we need to learn lessons from our experience.
Oh, well, yes, and there are plenty of experiences where we could really be looking for strength in. But thank you so much, Mr. G. Chandrashekhar. Thank you so much for really exploring all of those issues with us. And that's all the time that we have on this edition of Commodity Champions, though. Thank you for watching.